If you still think the US dollar is unshakable, you're already behind. I'm Richard Blake, and what I'm about to reveal could change how you see money forever. Right now, Bitcoin isn't just outperforming, it's quietly replacing trust in fiat with a powerful Bitcoin reserve built by institutions, governments, and everyday investors. This isn't a trend, it's a shift in the global power structure. And if you don't adapt your digital asset strategy now, you might be watching others gain the financial edge you were meant to have. Because whether we like it or not, the race to the next global reserve currency has already begun. Over the past decade, while stocks crawled and gold just glittered, Bitcoin's performance exploded, outshining every traditional investment. We're talking about a staggering annualized return of 102%, far beyond what the S&P 500 or real estate ever offered. For many investors, this isn't just a lucky streak. It's a paradigm shift in what wealth building looks like. And now, here's the kicker. Bitcoin isn't just seen as a speculative bet anymore. It's being compared seriously to the US dollar, with experts calling it a rising global reserve currency. If you'd said that 5 years ago at a dinner party, people would have laughed. Today they lean in and listen. And while traditional assets are still tied to central bank policies and economic cycles, Bitcoin operates on a different engine. It's fueled by a digital asset strategy that doesn't rely on Wall Street's games. And guess what? The institutions are starting to notice, because this might be just the beginning of something much bigger. Bitcoin was designed with a hard limit, 21 million coins and no more. Over 95% has already been mined, and that's where scarcity becomes a serious value driver. When something finite meets growing demand, you don't need a crystal ball to see what happens. This is exactly why some investors call it digital gold, but with even more predictable scarcity. Unlike fiat currencies that can be printed endlessly, Bitcoin's supply is fixed, transparent, and baked into the code. That's a foundation no government can manipulate. If demand increases just slightly, from pension funds, governments, or retail investors, prices could skyrocket. It's simple supply and demand economics. In fact, building a Bitcoin reserve today could become the smartest long-term investing move of the next decade. Not long ago, the idea of institutional crypto adoption sounded like fantasy. But now we have Tesla, BlackRock, Fidelity, and even governments like El Salvador buying Bitcoin like it's digital gold. That's no longer speculation, it's strategy. These moves aren't just symbolic. They validate Bitcoin as part of a legitimate digital asset strategy at the highest levels of finance. When Larry Fink says Bitcoin could digitize gold, he's not throwing darts, he's signaling Wall Street's next big bet. And governments? They're seeing a potential hedge against economic downturn, inflation, and over-reliance on the dollar. It's not about hype anymore. It's about survival, positioning, and future-proofing in a new financial era shaped by blockchain revolution. It's not just suits and boardrooms anymore. Retail investors are flooding in, and they're not alone. Financial advisors, family offices, and even conservative investors are being told to add Bitcoin to their portfolios. That's a seismic shift in sentiment. What's fascinating is how institutional money brings a kind of balance. While retail chases headlines, the pros are quietly building positions through Bitcoin ETFs and custodial services. This mix of emotion and discipline is shaping a new kind of market. So, if someone thinks they've missed the boat, they might be wrong. Adoption is just beginning. For those thinking long-term, entering now could still be early, especially if they follow a structured crypto portfolio approach with patience. Stack Bitcoin's returns next to gold, real estate, or even the S&P 500, and the difference is jaw-dropping. Some assets lost ground, not just in dollar terms, but in Bitcoin terms. That's a whole new way of measuring real value. Think about it. A luxury apartment that once cost 100 BTC might now cost 3 BTC. That's not just price movement, it's purchasing power evolution. Bitcoin isn't just storing value, it's redefining it. So while people cling to traditional assets out of habit, they might be ignoring the asset that's been leading quietly but relentlessly. The numbers don't lie, and in the age of financial freedom, it pays to watch the ones winning the long game. The forecasts are wild, but they're not baseless. Analysts project Bitcoin price predictions ranging from $100,000 to $10 million, depending on adoption rates, supply shock, and shifts in global finance. That's not clickbait, it's math. With a fixed supply, rising demand, and growing legitimacy, the upside is massive. If Bitcoin truly replaces gold or challenges the USD as a global reserve currency, those price targets could become reality, not fantasy. Of course, no one can time the top. But looking at previous crypto market cycles, the pattern is clear. Each bull run brings a new wave of believers, and sometimes the early skeptics become the loudest advocates by the next cycle. Even with all the bullish data, Bitcoin is volatile, and the biggest threat might be human behavior. Panic selling, emotional investing, and FOMO have wrecked more portfolios than bear markets ever did. That's where discipline comes in. A smart investor treats Bitcoin like any other asset. No idol worship, no blind faith. They diversify, plan for worst-case scenarios, and zoom out when the charts look scary. This isn't a slot machine. It's part of a serious digital asset strategy. The truth? Most people lose money in crypto not because of the market, but because of themselves. Mastering the emotional game is often what separates regret from reward in the long run. When Warren Buffett calls Bitcoin rat poison, people listen. But when former skeptics like Ray Dalio and Larry Fink do a 180 and start praising it, that's a plot twist worth watching. Even the old guard is waking up. Dalio went from doubter to believer, saying Bitcoin could serve as a hedge against inflation. Larry Fink now frames it as a flight to quality. These aren't influencers chasing likes. They're titans of finance adjusting their beliefs. And when beliefs change at the top, capital follows. That's why this isn't just about tech. It's about a financial revolution unfolding before our eyes. And it's not waiting for everyone to feel ready. Timing the market is a trap. The smarter play? Consistent, small Bitcoin ETF purchases over time. No hype, no panic, just a mechanical habit, like brushing your teeth or setting aside savings. This strategy removes emotion, flattens volatility, and builds wealth with patience. Even $50 per week, compounded over years, can turn into a meaningful crypto portfolio. And the best part? You sleep at night. It's not about gambling on moonshots. It's about creating structure, security, and long-term resilience. That's the mindset the pros use, and it's available to anyone willing to stay in the game without flinching. The top investors have something in common. They're boring. They don't flinch when the market drops, they don't chase pumps, and they treat Bitcoin like a long-term play. Because guess what? That's how financial freedom is built. They ignore Twitter noise, mainstream headlines, and even their own fears. They zoom out. They see Bitcoin versus USD not as a day trade, but as a decades-long power shift. And they place their bets accordingly. So while others panic, they prepare. And as this blockchain revolution unfolds, they quietly build the kind of wealth that lasts generations. But to get there, you need one thing above all: perspective. Now that you've seen the shift, what will you do about it? Will you keep relying on outdated systems and hope they hold? Or will you take control of your future and start building real, lasting financial freedom? The ones who win in this game aren't the loudest. They're the ones who act when no one's watching. So ask yourself, how much longer can you afford to ignore what's right in front of you? Even a small step today, a single move toward a smarter digital asset strategy, can be the beginning of a massive transformation. But the window won't stay open forever. If this content sparks something in you, don't just walk away. Subscribe to the channel, turn on notifications, and stay ahead of the curve with every